Hello, everybody. This is Professor Bennett Tchaikovsky, also known as the accounting professor. Well, Professor Bennett. So let's go ahead and take a look at the Altman Z-score. So what exactly is the Altman Z-score? And, again, I'll post a link. I'll basically include this link from Investopedia below. So thank you, Investopedia. Really, what the Altman Z-score is essentially is a way to determine whether a company is basically headed for bankruptcy. And there's just basically a ranking of 0 to 3. And so let's go ahead and take a look at the formula. So here we've got the first part is working capital divided by total assets times 1.2 plus 1.4 of retained earnings divided by total assets. And then over here, we've got EBIT divided by total assets times 3.3. 0.6 is the market value of the equity divided by total liabilities. And then over here, we've got 0.99. We got sales divided by total assets. Okay. So, and I think that this is probably going to be, I would probably say this is average total assets. Yeah, I mean, if this is being defined as asset turnover, oh, by the way, it's Stern finance professor Edward Altman. That's pretty awesome. Um, let's go ahead and look at this over here. Okay, so go ahead and do this for five below. So the first thing I'm being asked to do is the first component, which is going to be for five, which is my working capital. So I'm going to go ahead and basically say, I'll just kind of make this a little bit nice. Give ourselves a little bit of room. So we'll go ahead and put here 1.2, and we'll just go ahead and label this as 5 as of 2/1/25. We're probably, if we were doing this real live or we were doing this, I would probably run it on the most recent financial statements, but we'll just do it for the year end just to make your lives a little bit easier. So let's go ahead and take a look at the working capital. So it's going to be my current assets minus my working capital, my current assets minus my current liabilities. And I'm dividing this by my total assets. Okay, next one over here is my retained earnings divided by my total assets. Okay, and we'll just kind of denote this right over here. Okay, and then we've got over here, we got 3.3 times. Well, we know what our total assets are. So our EBIT right over here is operating income. Okay, and then over here are total liabilities. Okay, and then we've got our sales, and we're just going to keep this in line with just our total assets, not average total assets. Let's go ahead and put in our sales, and then we'll do the last component of the market value of the equity. Okay. So then our market value of our equity. So over here, okay, so the market cap is 8.09 billion. And let's kind of see how accurate that really is. If I go through here and I take what the market value of the equity should be, is that if I'm taking the number of shares outstanding. Okay, so over here, I've got 55,146,485 or 55. Okay, so in thousands except for share and per share data. So this is a real number. So if I take my shares outstanding, the 10Q, and I'm going to multiply that by my price per share. And my current price per share is 147.05. If I multiply this out, I get about 8.1 billion, which is consistent with the market cap that's showing right over here. So it's close enough. Okay, so the market value of the equity divided by total liabilities. Now here's the problem. This here is in absolute dollars, and then this number here is going to be in thousands, right? So when I go through and I'm doing this, I want to be really careful as to, because these are amounts in thousands. So what I'm going to go ahead and do is, because these here are all in thousands, so I don't have to worry about it. So multiply this by 1,000 and whoa. Okay, so total assets should be here. This should be my 5 balance sheet of my total liabilities times 1,000. And there we go. Okay. So now let's go ahead and do the computation. So we have 594,925 divided by 4,339,574 times 1.2. Well, let's do it like this. Okay, so this will be the value. We basically take this divided by this, and we'll make this nice. Do these all across. And now we're going to go ahead and multiply this by our factor. So this is going to be 1.2, 1.4, 3.3, 0.6, and then 0.99. So under the Altman Z-score, again, we'll take this down to 2 decimal places. Let's go ahead and, okay, so right over here. Okay, so when it comes to 5 below, and we look at the Altman Z-score, we've got about a 3.75, which is higher than what they go through and have. And part of the reason why this might be basically a safe zone company is because when I look at the balance sheet, there's really no debt. It's a lot of this is just operating lease liabilities and that kind of crap. So that's really what that is. So that is how we go through and compute the Z-score for Altman, basically the Altman Z-score. This is how we went through and did it for 5 below. Yeah, hope you enjoyed that one. I will see you on the next video. Have a great rest of your day.